A coordinated approach between the Treasury, the Bank of England, and the Financial Conduct Authority could help the United Kingdom develop regulations that allow cryptocurrencies, stablecoins, and central bank digital currencies, CBDCs, to coexist. And CryptoMoon spoke exclusively to Varun Paul, who formerly served as the head of fintech at the BoE, about the UK's efforts to establish regulations that support the use of cryptocurrencies and stablecoins while maintaining investor protection and financial stability. And then Paul, now the Senior Director for CBDCs and Financial Market Infrastructure at Fireblocks, says the UK is closing the gap with the European Union's markets in crypto assets, which he describes as the most advanced regulatory framework globally. There was a period where the FCA said, we're not going to regulate crypto in any way because we don't want to endorse it. As a result, the UK will fall behind Europe, but it's catching up fast. Paul explains. The UK Treasury published its final proposal in October 2023, outlining its plans to regulate the sector, with companies offering cryptocurrency-related activities to be authorized by the FCA. And you could see the latest set of publications is trying to position the UK level with the EU and encourage innovation so that London, as a fintech center and a crypto hub, it's recognition that the FCA, Treasury, and the Bank of England can't stay quiet on this subject any longer, Paul adds. And while the UK may have been slow in developing a framework that oversees the broader cryptocurrency space and the systemic role of stablecoins, Paul believes the country stands to gain from a cooperative regulatory approach. The Fireblocks CBDC director says the development of regulations has been quicker in the country, given the UK does not have to coordinate rules between different states like the EU has had to. The dovetail approach of the Treasury, BoE, and FCA has also lent a hand in creating rules that balance fostering innovation and financial stability. Paul highlights that the FCA's regime currently oversees the management and use of stablecoins in the UK, as well as smaller cryptocurrency and fintech operators. Meanwhile, larger, systemically important operators would fall under the radar of the BoE and its Prudential Regulation Authority. Stablecoins have become an essential cog in the cryptocurrency ecosystem. Tether's dollar-backed USDT's market capitalization recently surpassed $100 billion, becoming the most used stablecoin worldwide. Paul says that dollar-backed stablecoins continue to be used as a gateway to access the broader cryptocurrency ecosystem and will remain so until other blockchain-based digital forms of money are available that rival their ubiquity. And the transparency of Tether's reserves for circulating USDT has often been criticized by mainstream commentators, and Paul says this narrative remains a concern for the UK's regulators. From the very outset, the UK regime said if you're going to call yourself a stablecoin, it must be redeemable at par and held in liquid assets. That's something that the Financial Policy Committee in the Bank of England said many years back. He adds, nevertheless, its policymakers are keenly aware of the demand for cryptocurrencies and digital money that can be used to purchase them, as Paul explains. What also needs to be considered is the use cases for stablecoins, tokenized assets, and CBDCs between different institutions. Paul authored a white paper published in November 2023 for Fireblocks, which considers the potential of a smart contract managed system that allows a central bank to issue a CBDC price as a base asset for commercial bank tokenized deposits and stablecoins. The paper outlines how a country can have a consistent set of money which protects and preserves this concept of uniformity. Paul says that users don't really mind what is the form of money they're using. Just like they don't mind today that they're using banknotes, credit cards, or e-money. Specific use cases will ultimately decide between the need for stablecoins and CBDCs. Crypto natives may feel more comfortable using USDT, while older generations may lean towards centralized digital currencies issued by trusted financial institutions. Some people will be for the most trusted risk-free money. Others will go for forms of money that allow them to enter DeFi, for example. Others use a particular digital currency to pay their taxes. And then maybe, for that reason, you'll need and see various options integrating and working together. Paul concludes, specific use cases will ultimately decide between the need for stablecoins and CBDCs. Crypto natives may feel more comfortable using USDT, while older generations may lean towards centralized digital currencies issued by trusted financial institutions. The UK's Economic Secretary to the Treasury, Bin Afalami, recently indicated that the government is working toward passing legislation regulating stablecoins and cryptocurrency staking by the end of 2024.